Hello, welcome everyone. Good. We'll get started for the session over here. Has been a pretty volatile kind of start of the month. Especially with Trump's coming in and of course all the policies, and such, right? With the recent tariff and things like that. Right. So we'll talk a little bit about that. I would foresee market volatility continue a little bit going forward until things get settled down a little bit more. Okay, so naturally that would impact the financial market, right? Whatever instruments you're trading, there might be some impact. Obviously, certain currencies may not have a direct kind of volatility being impacted, but of course we are talking about equities. Definitely, certain sectors as well, certain industries that the policy may impact would have that volatility kick in. Okay. Now, in general, if I take a look at the dollar here, you can see how volatile it has been. I would say just for the past like 1 week, going into this week itself, right? We have initially the dollar strengthening quite significantly, with a huge gap opening, and then the market came back down, kind of reverse and cover the entire gap within yesterday. Okay. And of course in FX world, usually during a weekend gap opening, the market tends to cover the gap fairly quickly, right? But sometimes when the gap happens due to fundamental policies, when we talk about U.S. president putting in or U.S. administration putting in a policy, it's a fundamental shift. Okay, and always my take here is if today is a fundamental shift, it takes precedence over the technicals. Okay, and with that in mind, when there's a gap over the weekend due to a fundamental perspective, I don't really expect the gap to just immediately cover in the short run, right? But of course, I don't trade the gap. I don't have a strategy to really kind of like capitalize on weekend gaps in the FX market. But just sharing my thought here is usually from a fundamental shift in the market, that would take precedence, right? But having said that, again, what Trump is doing, my take is he's just basically trying to force certain actions from the opposing countries, right? Whether it's Mexico, whether it's Canada, whether it's China. And he has succeeded to force Mexico to take certain actions, right? So at the end of the day, it's where I'm saying volatility is going to continue because at the end, it might not be an actual tariff that is being set in place, right? Because if the idea here is to kind of like poke the other country, to kind of like, I need your attention, I need you to do something in favor of me, and if that's being met, then things might change. Right? So that's where I think as we move forward, you want to be at least prepared for slightly larger volatility in the markets. Okay. So as we look at dollar index, right? Initially with that impulsive move to the upside, with dollar being strengthening, there was a possibility where this can be the pullback, and then we start to see some sort of a upside, right? If we get a corrective development. Okay. As of yesterday, but yesterday we did see a very very strong pullback. Okay, kind of putting in a V-shaped formation here as we see. So that gives me the perspective that alright, maybe the pattern structure from a chart perspective is that this can be a bigger WX and then Y coming back down. Right. But again, having said this, things would change based on again the policies update, right? But as of now, if you can get a corrective development here, okay, this is the part where this can actually come back lower, and in the short term that might open up some possible opportunities in shorting the dollar, right? And of course shorting the dollar then in terms of like the major pairs, I've rate flat the pound dollar. I think that's an opportunity and also a valid setup that we can focus on too. Okay. But near term here, that's the direction overall that we're looking, right? So if I kind of zoom out a little bit, we are looking at the dollar, overall it's still strong, and we might see this as a temporary pullback. Okay, but from day to day, week to week perspective, if you can get a corrective here, then we can expect more downside for the dollar itself. Okay, then obviously if you kind of flip it onto the euro side, kind of like the inverse of things, right? So you can see that this gap has also been filled, and we're looking at potentially an ABC, right? A three-wave structure. So short term, there might be the opportunity given if the market pulls back correctively. Okay, so again, the baseline here is for us to be looking at a directional bias, there must be a clear pattern structure, right? So three wave is obviously one of the kind of core pattern that we look into in terms of wave. Impulse correction is also a core pattern combination, right? So that's where this correction development combined with this decent bounce up will give us that pattern combination to tell us high probability the market will likely continue to the upside. Okay, but euro dollar doesn't really have a decent setup in the near term, and I realized that GBP USD may be cleaner in the overall structure here, and there is also an opportunity set up in the lower time frame, right? So GBP USD, I think the current structure is quite clean. We have this upside move with this pullback in three wave. Obviously, the recent dip to the downside is pretty impulsive, but we did see a very nice little support around that 618 retracement, right? And of course, we can see that market kind of did a V-shaped bounce off that. Okay, so if the market continue to pull back correctively, that would open up a setup on the nearer time frame, in a smaller time frame, and for us to kind of look for opportunity to buy, right? To just minimally expect a three-wave WXY. Okay, so if you take a look at the lower time frame, right, GBP USD, based on the kind of smart money principle of setups, we don't have every criteria in this setup. Obviously, we don't have a liquidity sweep in terms of like a mini kind of like double bottom, right? We don't have that. But what we have is, while we are lacking that liquidity sweep criteria, we do have a higher time frame confluence of a key level at 618, right? So this bounce here essentially is where the higher time frame 618 is. Okay. Now, if you really want to force things in, there are certain lows here that was taken out as well. This low wasn't, but this low is. But I don't want to go, too far on that, right? I'll just take it as, near term here. There's really nothing in terms of liquidity. But we have the higher time frame confluence, as I mentioned. Okay, so we have this big momentum push to the upside, impulsive move as well. There are tiny bits of fair value gap. I've highlighted this as an order block. And of course, using Fibonacci here, we have the key area. Okay, so what we are waiting for is essentially a corrective pullback, right? You don't want to be kind of like having an impulsive push down and then trying to catch a trade if that's the case. Okay, so logically, what I mean by waiting for a corrective pullback is that you want to give it time. Okay, when I mean corrective, basically means that you need to be patient, right? So a little bit of time expectation, it takes a bit of experience, but the idea here is, now it's at 8 p.m., right, in the evening. So the idea is, do we set a pending order now? Most likely no, right? I personally did not set a pending order as of this. Why? Because I understand that if I want this to come back correctively, it needs time to develop, okay? And just based on some visual kind of projection, okay, suppose I want it to come down in a way that, kind of looks something like this, then, you can look at the vertical axis. That would be somewhere between Wednesday 1 p.m., right? So I know that the earliest possible time for me to kind of get involved in the trade of this setup, if I want this to come down correctively, would be as, it's only going to be as soon as tomorrow. Okay, so that's something to know. Okay, so there are components within a setup that we need to take note of, right? It's not just about FIPS level. It's not just about fair value gap and things like that, right? So there's a couple of things at the end of the day that few component comes together makes it a higher probability setup. Okay, so that's on GBP, right? That's something I'm looking out for going into tomorrow. Now we do have this already valid today, but again, the last piece is really the price action, right? We want this to come down correctively. That would strengthen the entire setup going into tomorrow. Okay. Then we have Aussie. Pretty similar in a way as well, where we did see price take out that low and did a V shape, right? So potentially you can even see this as a double bottom. Okay. On the high time frame on the H4, a double bottom is only being confirmed if it takes out the neckline, and that's gonna take a while, right? So right now we are looking at, if this is gonna be corrective, we can be like preemptive and say that this is likely gonna take out that high, right? Because then that would be a nice little V-shaped rejection followed by correction. Okay. Now Aussie dollar, technically, if you go down to the lower time frame, would also present itself as a valid opportunity that we can look into. But since personally I'm more in favor of the pound dollar, I would actually avoid taking this trade here as part of like risk exposure. Okay, because if I'm gonna buy the pound dollar at the same time, if I'm gonna buy the Aussie dollar, then I'm being exposed at the dollar twice. Okay, and that's not something I would be comfortable with. Okay, so just have this in your watch list. Maybe you might favor Aussie dollar a little bit more than the pound. That's something you can keep an eye on. Okay. Then we have the dollar Canadian. Dollar Canadian is a very, very interesting one because it's huge, right? I mean, the peak was somewhere close to 1.48, and then the market is currently trading at 1.44. That's about like 300 to 400 pips in I would say like 2 days, right? We have a gap that pushes it up, then we have like yesterday night today coming all the way back down. Okay. Again, why dollar CAD is like experiencing greater volatility is because the tariff itself, right? The policy itself has a direct impact on dollar and Canadian. Okay. So I would say this currency pair moving forward is gonna continue its volatility. It's not gonna be settling down so soon. So again, unless necessary, maybe you might want to just avoid trading this pair for the near term being, right? Because of policies shift that might have a direct impact in these two currencies. Okay. But having said that, from a technical point of view, right now we would see this as a V-shaped formation. Of course, if this gives a corrective setup, corrective pullback, then the high probability is due to the downside, right? I mean, that is still based on technical perspective. Okay. So that's the take on dollar Canadian. I don't foresee me getting involved in any setup in the near term for dollar CAD. Then we have the yen pairs, dollar yen. You realize that dollar yen doesn't experience much volatility as compared to maybe like euro dollar or even the dollar Canadian, right? So technical wise, then this becomes a cleaner structure that we can focus on, okay, in terms of like trade setups and things like that. So dollar yen here, we are looking at bearish bias. I think the structure is pretty clean. From this top here, we have this down move as a potential A. Currently, the market is developing correctively, I would say. Okay, and internally, we have this pretty nice channel structure. So a simple fit, from high to low, usually we see some reaction around that 50 to 618. I mean, that's a really zone. If you look left, that will also coincide very nicely with previous highs here, if you can't put that. So key areas definitely around 156.30. Okay, what this means is that if price continue to develop higher in a corrective fashion and it enters this territory, we can then now start to look for sell setup, right? So one of the classic sell setup is some kind of a liquidity sweep coming back down on the lower time frame, do a little bit of a pullback. That would be your sell setup. Okay, I mean, that's the setup I use. Obviously, you can have your own strategy and setup that you look into. Okay, but I think dollar yen is a pretty nice little opportunity that we can keep an eye on, maybe closer towards like Thursday or Friday. Okay, because this is on the 4 hour, it takes time for price to actually reach the key level, right? So earliest time projection here is somewhere going to be Thursday and Friday this week. Okay. I mean, since we're on the yen, I'll just jump towards like dollar yen, on pound yen, odd yen at the moment. Okay. So over here you can see this is the pound yen. Okay, we do have that gap here as well, right? So I already mentioned pound yen gap closes as well. Yeah, I mean in FX most of the time the gaps tend to be covered quite quickly. Okay. If you're trading equities, it's a total different thing, right? Equities gap is oftentimes a fundamental shift, as I mentioned, and they don't tend to be filled all the time. Okay. Yeah. So the yen pairs here, I'm still looking at overall bearish, though the recent pushes to the upside is pretty decent. Okay. Now this also opens up an opportunity to share a little bit in understanding what is potentially probable and what is in terms of statistically probability, right? This is where pattern comes in. Okay. So in wave theory and wave principles, we have this thing called a tree wave structure, right? I mean, not all the time the market is going to be perfectly in trees, but we always expect a minimum of tree, right, to complete it. Okay. This is to give you an analogy. What I mean by expectation is that, okay, today if you see that outside it's cloudy, the sky is turning dark, we always would expect it will rain soon, right? We'll assume and we'll expect it's gonna rain, right? Because of the condition of the weather. Does it mean that every time, just because it's cloudy, just because it's dark, it's gonna rain? No, but statistically, there's a high probability it will, right? And for that reason, we're gonna have that expectation. Okay. Now, if you take the analogy and put it into the financial market in terms of like analyzing technical patterns, right? It's kind of the similar idea. Okay. Will the market always form a tree wave? No. But is there a high statistical probability that it tends to do that? Yes. And that's the reason why we have an expectation. Okay. Now this ties into forecasting, because today if you have an expectation, it guides you in your forecasting, right? It provides you a forward guidance, right? So the idea here is today we understand the market tends to form in tree, right? Now if today we have this low, we have this push up, the market came down. Okay. We see this as a potential one. Okay, one swing up, two swing here, and then that might be a possibility of this developing. Can that happen? Yes, right? So that is what we call probable. Okay, because of a tree wave pattern, right? However, does it necessarily need to do that? Not necessary, right? So can this then also be the case where this is it and then it starts to come down? Yes, right. Now, to someone who is very, very new to trading, you would say that, oh, isn't that equals to not saying anything, because if the market doesn't go up, it will come down, right? There's a fine line between that, because again, I want to highlight the part is we do forecasting and we do scenario planning is to with one of the core objective of gaining clarity for itself, right? If today the market do certain things around this key area, it starts to pivot from one scenario to another in terms of like statistical edge, right? So the idea is today understand, all right, there's two high probable scenario, right? One is this can go higher. Okay, we call this scenario A, right? And then the other option here is the market just starts coming down, right? We call this option B, right? Or scenario B. Now, as of today, if we just base on this two possible scenario, would you agree that it's 50%, 50%, right? I mean, based on nothing else, it's either of this. So it's a 50-50 thing, right? But this is where I say, as someone who is fairly new, then what you see will be, oh yeah, it's 50-50 because if it doesn't go up, it's gonna come down, right? But in actual fact is what is gonna happen next, right? So as the market continue to develop, it continue to give us more information, okay? And that information is gonna start to tell us where is it likely gonna tilt towards, right? Is it gonna be slanting towards a possible of A scenario, or is it gonna be like potentially a B? Okay. So what would tell us, right? Number one, obviously, is time, right? Because how the market is gonna develop next starts to leave a little bit more clue. Okay, now I'll give you more detailed scenario planning, right? If today the market actually from the key area 618 comes down correctively, okay, does something like that, okay, this then starts to tell us, all right, we have this little pattern within it. There's a high odds this will go up, right? Because of that inner structure pattern. Now, if this is going to go up, it's going to start to lean towards the possibility of scenario A, okay? And therefore, it's not going to be 50-50 anymore. Maybe that would start to build into a 60-40 possibility, right? If the market takes out this, then maybe that slants towards an 80-20, right? Because, or I would say, you know, if that takes out that high, it's more of like scenario A is already there, right? So that's what I want you to be able to understand, right? When we do scenario planning, you know, statistically what is possible and what I mean by probable, okay? So, you know, today if you only start to see, oh, if it's not going to go up, it's likely going to come down, and then when, you know, you just see it like that, then obviously, that's the surface understanding, right? If you go deeper into that, as I mentioned, really depends on how the market develops there, okay? So, if it's going to be slow pullback, then starts to build up the high odds that it will go higher, then we slant to scenario A. If this comes down pretty impulsively, you know, forming some sort of a little V-shaped formation here, okay, then obviously that would build into higher odds of this coming down, right? Then we'll slant more towards scenario B, okay? So when the market is at a key area, that is where we want to put a little bit more emphasis to see what's going to happen next, because that's the, like, you know, it has come into a crossroad. You know, which option or which route we would eventually focus on really comes back to how price is going to develop moving from here, okay? So that's something that Elliott wave actually able to really help us do this kind of planning and scenario, because we can't understand what are the pattern structure that price tends to develop, okay? We also understand based on certain combination of price development, impulse and correction, it starts to give us more clue, okay? Again, it's not 100%, but it's high probability, right? So that's where the expectation comes in, right? Yeah, so diving a little bit deeper into this conversation here for today, but that's my take, right? Okay, so the primary view right now is bearish, okay, because to me is today, if this comes correctively, okay, it can actually short term still go back up, okay, but then that would also just be opening up a bigger structure for maybe a downside eventually, okay. So overall direction is still going to be bearish. It's just a matter of like short term, do we still see one more push, or we're just going to see that drop from here, okay. Yeah, so hopefully that gives a little bit of clarity in terms of like the thought process behind, you know, scenario planning, okay. Good. Okay, so Aussie yen here is kind of similar idea, okay. We have the market took out this low. Technically this can be a complete pattern, right? We have a three-wave move, we took out that low. This is a correction in trees as well. That low itself can actually complete the entire structure from the top, and we can start to see, you know, a bigger reversal back up possible, okay. So the thing here is, what would give us, again, back to the part on A and B, which has a higher scenario, right? Would this continue to drop, being scenario A, or will this be the low and just this takes off as a major reversal as a scenario B? Okay, again, why we are at this juncture where we have A and B is because we are at the key area, right? Okay, I mean, back then when price was here, we don't have that kind of crossroad decision. It was quite clear at here, the high probability is down. Okay, so we only reach to a part where we have A and B scenario, or kind of like which one would likely go towards, or which one do we lean towards, is when the price actually come into a key area. Okay, now why this is a key area? Because if I zoom out, okay, again, one of the key pattern structure over here we can see is from this peak, the market can potentially be completed in terms of this structure. Okay, and you can see this 1, 2, 3. So if this is a 3 wave coming down, that will complete the correction of this, and we can actually start going higher. Okay, so we are at a key area, right? Because price took out this low. This structure can be a complete structure for upside already. Now, again, then understanding that, how do we know, okay, which scenario would likely be the case? Really depends on how price is going to react here, right? If this correctively developing, then obviously we expect one more push, right? Why? Because impulse correction suggests higher downside probability. If today the price pulls back, and then starts to go up impulsively and not do any sort of a reaction around 618, okay, if it just goes up, it doesn't bounce back down, it continues to do correction here, then obviously this tells you, okay, upside has a higher probability, right? So when price enter a key area, we will then enter into the part where we have a crossroad, A or B. Okay, and the part here is we actually would come into that situation more often than you think. Okay, I mean, sometimes it's clear, right? Like GBP USD over here, it's clear, right? There's no A or B. Okay, the focus now is just upside. But you look at pound yen, you look at Aussie yen, because they are key areas. Okay, then there will be that situation where whether is it A or B, right? So that's something to know. Okay, another one that is currently in that situation is obviously gold, right? Okay, I mean, gold is actually at all-time high. If you ask me, how would I see gold in the longer term? I would say eventually it's still gonna go higher, right? It's just gonna keep breaking all-time high. Okay, but of course it doesn't break all-time high every other day. There will be bound to be a pullback and retracement and sort of. Okay. So again, why I say gold is also at a crossroad, because we have broke that high. Okay. The market has kind of extended quite a bit, right? See that. At some point in time, it's likely gonna do some sort of a pullback. It's a matter of time. Okay, and it's a matter of when. Where is it gonna start pulling back? Okay. So what I'm looking here is, if today the market comes down fast, then obviously if it does a corrective pullback, short term we can capitalize on the pullback trade. Okay, if the market comes down just like this, okay, then obviously we won't bother about looking at sell opportunity. We'll be more keen in, okay, after this pullback, there's a good chance it's likely gonna go higher. Okay, but more often than not, when the market are being extended overly, the pullback is often pretty sharp. Okay, things like this, right? Right, the pullback is generally going to be sharp. Okay, now this is what we call a shallow pullback, right? So again, if you take like historically how price has developed, okay, this, right? So if you take this here and you map it over here, okay, that's what I meant, right? If that's going to be the case, you naturally will be looking for upside. But then again, often, when we see some sort of a extension like that, without having, kind of a significant pullback that really developed, there's a good chance, okay, something of this extent can actually take place, right? I mean, even if that takes place, it's not a bearish move, I mean, near term, yes, short term time frame, yes, but on a higher time frame scale, it's just really a pullback for maybe after that an extension up, right? Okay. Yeah, spending a bit more time on this, but it's still neutral right now because we are at a key area. Okay, how we gonna be looking and focusing really depends on how markets gonna develop. Okay. Yeah, so that's the same for silver. Silver is really entering a key area. Okay, between the 100% and of course the 123, right? So kind of remove that 100% and keep chart clean. But that's a key area that we're entering. Okay, so we'll see how things roll. Silver was something that we had a possible short-term upside, but kind of invalidated that low. So the analysis has to be updated, right? Okay, so price broke invalidation for now. I'm just gonna stay neutral. Again, this is gonna be a volatile one because of dollar and Canadian, right? So basically, the U.S. and the Canadian side will have a almost close impact on crude oil because of CAD. Okay, so just bear in mind if you're kind of like trading on crude oil, volatility is going to be there. Okay, yeah. Equities, okay, volatility is there, but again, same thing with gold. If you ask me overall, where would I see equities in general for the year? It's going to be upside. Okay, with the current trajectory, I'm still slanting towards upside, unless inflation picks up and the Fed suddenly just pivot entirely, right? But we'll see. Okay, I wouldn't say impossible, but we'll see. So right now, I'm still generally bullish for the year. Again, that doesn't mean that every other day the market is just gonna go up. Um, but technical kind of aligned too, right? We do have a very nice clean three wave reaction of the 618, pretty nice as well, pretty decent. Okay, so as of now, the expectation is upside, right? I think it's likely gonna break that high. Okay, so that also generally applies to the entire U.S. equities, right? Whether it's it Nasdaq, whether it's it Dow Jones. I think generally we're going to be bullish, but each of it would has its own structure development too, right? Like it doesn't has to be all concurrently going up. Sometimes there's some sort of a divergence. Okay, but it is what it is. Speaking of equities, I don't really focus too much on it because I don't really trade them. I kind of like semi invest in a way. Yeah, but this stock here kind of hit the news yesterday, today, right? Depending on again time. Okay. But the earnings were released yesterday and it was a pretty good one, and we have a gap, right? As of now, you can see that's the pre-market price, so it's actually about a 20% gap up, which is great, right? Fantastic. Okay. And then at the same time, certain companies are being affected quite badly because of the US. If you heard of it, like ChatGPT and DeepSeek, right? Yeah. So again, when I mean general equities going up, it doesn't mean that every other stocks are gonna go up, right? Sectors and industries are different. Okay. So I'm not someone who focus too much into individual stocks and industry, but I'm looking more towards like longer term perspective on certain stocks. Okay, more like investing perspective, right? So that's not something I always look into and talk about. Okay. Yeah, but those are the little bit on equity side of things. Generally, I think some of these equities, global indices, are probably gonna be in the pullback phase. Okay. This is German DAX. So German DAX, we have this top being established as of now. We have this gap down. If you get a corrective move, we can expect one more push back, right, to complete that 1, 2, 3. Okay, so we have this huge move up, 3-wave pullback. Okay, that is pretty similar to FTSE as well. Okay, in terms of like price structure over here, very very similar to the Switzerland side of things as well, right? Okay, yeah, even in the Aussie side of things. Okay, so a couple of indices are more or less developing the same pattern structure. I mean, the US is slightly different, but if you kind of compare like German DAX, you compare the FTSE, the UK side, Australia side, as well as the Switzerland side, likely these are all doing a little bit of a pullback. Okay, yeah, so hopefully that's clear. And process, this is GBP AUD. My drawing is gonna take a while to come back up. Okay. So GBP AUD, again, we are at a crossroad, right? 618, depending on how price is gonna react. If we get a corrective pullback, then we'll definitely be expecting upside, right? Okay. However, if the market just decides to come down strongly, impulsively, and break this low, okay, then obviously we can start to see more downside breaking that low, because that would then be a simple three wave. Right, so currently we're at the crossroad, we're at the key area, we need to give it some time. Okay. Then we have the Bitcoin. Okay, Bitcoin actually came down quite deep. Initially we were expecting some sort of a simple channel structure like that, right? We could see that came down a little bit deeper, but it still maintained this low here. Okay, didn't really get invalidated. So that's still a valid three wave move. We did get a very decent bounce to the upside as well, right? So if you take a look at BTC over here, I'm gonna maintain a bullish bias. Okay, and we can expect more upside from here as well. Okay. Yeah. So I think generally Bitcoin would have its bullish move or bullish bias overall, but it's definitely not a quote unquote safe haven status. Okay, it's more of a, I would say, risk asset. In a way, you can kind of like look at equities indices as risk asset as well. So during a kind of risk on environment, Bitcoin tends to perform better as compared to like risk off, right? Okay. Yeah. So that's my take. Okay. So I think in a nutshell for this week, the dollar is gonna continue its volatility, right? And for me, the primary focus as of now, in terms of like tomorrow kind of setup, we have the GBP USD side of things. We have some of the pairs potentially aligning to give us a setup later part of the week, depending on how price is going to develop, of course. Yeah, so generally those are the things. Okay. Hopefully all good. Okay. So without any other questions I see here, hopefully today's session give you guys some insights, diving a little bit deeper into like certain principles and approach, from how I look at it. So let's see how the market develop from here. Okay, all the best, and we'll see you guys in the next week's session. Okay. Oh, okay. Char asked about crude oil. Yeah, so I mentioned that earlier, crude oil WTI, basically right now I would stay neutral. Technical wise, it's not the cleanest like structure here, right? And then of course, can mention about US and Canadian side of things, where Trump is imposing tariff. Canada is kind of responding by imposing tariffs as well. During this period of time, with all these developments, volatility is going to be there. So might not be the best time to kind of like look at that. Okay. XRP I know recently did quite badly, right? Okay. Yeah, so that's that major deep. But the bounce back is pretty strong. Just do a quick measurement to roughly understand. Yeah, it's huge. Okay, 30+% kind of deep. Good. If you take a look at the higher time frame on the daily scale perspective first, this dip breaking that low and then immediately bouncing off. If you're familiar with SMC, it's basically a liquidity grab, right? Kind of like trap traders in and then reverses, right? Depending on what principles you're applying in terms of your analysis aspect. Okay. So for SMC, it's actually a bullish signal. Okay. It's a bullish signal because it traps the sellers here as a fake break and then push back up, right? And then again, depending on price action, if you're looking at this as a candlestick pin bar rejection, you're bullish on that too, right? From Elliott wave perspective, okay, we are seeing a V, and we're not a 100% kind of like bullish bias until we see a corrective pullback. Okay, so Elliott wave would want to see pattern structure combination, right? Impulse correction give us that combination. So from Elliott wave perspective, what we'll now establish is obviously this is a swing low point. Okay. What we'll love to see is for some sort of a corrective pullback. If the market does that, okay, then obviously we'll be bullish and then we kind of expect price to continue going higher, right? Okay. I think one thing to note is that if you're looking at some of the major cryptos, right, we're not talking about like meme coins, right? Not going to be meme coins. We're not talking about small market. I mean, XRP is one of the bigger ones, right? In general, they tend to have a correlation with the major one, which is Bitcoin, right? So if Bitcoin kind of go higher, the sentiment on the other cryptos, the bigger ones, tend to be positive as well, okay, and vice versa. Okay, yeah, that's something to note. Okay, so if I were to show you the crypto market, right? To me, I think these are the couple of bigger ones, right? XRP, LCT, Litecoins. They are more of the bigger ones, right? Of course, one way to also look at the crypto market is the total market valuation, right? I mean, you can do a technical analysis on that as well, right? If you're on TradingView, you can like put in a symbol, okay? Total basically is the total crypto market cap. You can put in an analysis on that as well, right? So based on the technical analysis, what we're seeing here is some sort of a correction, right? So same thing, right? You can see very similar chart pattern because the few major ones can carry the entire crypto market cap. Right? Yeah, so that's my take on XRP, right? If you're looking at Solano, okay, we did have, yeah, so on the daily scale, right, we did have this little bottom kind of like almost similar concept of liquidity sweep, okay, that kind of rejection back up. I would say really depends on how price is going to develop here, right? Same thing, right? If you get a corrective pullback, you can expect upside. The thing here is if I'm gonna put in a wave count, we do have this as a significant low, right? So I think the 5-wave structure of this is pretty clear. Okay, so that's something to be cautious as well. So wave 4 is valid. What I mean by cautious is because if that's going to be a 5-wave structure, it opens up the possibility where this can actually come back down to give you another simple, kind of ABC structure, right? Some sort of a pullback. Okay, let's just check if XRP is a different one, right? But again, XRP, you can see this is a significant push. If you take this as a major low, right? This will also potentially give you a 5-wave completion. So what can potentially also happen over here is that this can be a B, and C, right? So again, this opens up the part where how price is going to develop here, right? If this comes down correctively, short term you still be expecting upside nonetheless, right? But this can still turn into something like that to give you your B wave, and then one more drop, you know, breaking that low to complete the C wave, and then only going higher. Okay, so this is on the daily, right? So if you're kind of trading, then as I mentioned, if this gives you a corrective structure, you still be looking at the buy first. Okay, and then you flow with the market as it continues to develop on a week-to-week basis. Okay, yeah. So back to Solano, right? Right. So generally, this is again on the daily. So if that's going to be the tick, same thing, right? If you go down to the 4-hour, okay, you go down to the 4-hour and you get a corrective pullback, okay, week-to-week basis, you still be looking at a buy, right? Short term, right? Maybe coming back towards like this key area here, that will give you your A, B, and then C, right? So short term, you can still look for buy first. Cool. Hopefully that's clear, right? All good. Hey, hope that is clear. So yeah, hey, that's my take for the week. All the best, as I mentioned. Let's see how the market continue to develop. Okay, and we'll see you guys in the next one. Okay, all the best. Good night. See you guys. Bye bye.